Welcome back. We are moving forward with the second part of the subpart E in the webcast series. It'll be number 8. So it's the cost principles, and we will be discussing the actual selected items of cost. So we're going to be focusing on what has really changed, what are some new items of cost that have come in with the new uniform guidance. Again, just a reminder for folks that might be just looking in on this session, we are doing a 9-part series here. So this is session 8, and we have one more left on audit requirements. Also, a reminder of the supplemental webcast resources that are going to be posted with this webcast. We have a number of tools that you'll have. At the end of the session, I'll probably go over one of these tools to show you how to maybe put this all together, and especially with so many items of selected costs that we're kind of looking at, are kind of new for us. So we'll give you some recommendations on that. Okay, so in this segment we're going to be covering, selected items of cost from 420 to 475. So these are previously in the old document, OMB 87. I think it was Appendix B, and it had all of the items of cost listed there in categories. We probably all labored over that. So what we did is, again, did the side-by-side of those costs to see if anything changed in the language. But more importantly, what we're seeing is that because we brought in the cost principles from the nonprofit organizations and their guidance, and also institutes of higher education, we're seeing some new items that we hadn't seen before. So, all right, so let's jump in and see, are there some new items of cost that we need to look at? If so, what is the impact to our program, and what changes do we really need to make? So the first one to look at is 425, paragraph A. Nothing earth-shaking. Again, this is the new language added in that under 425, is that it's a reasonably proportionate share of the cost of audits performed in accordance with the Single Audit Act. So again, just because the IHBG program has the most money, it doesn't mean they pay the most on the federal award, right? They have to pay. It has to be a reasonably proportionate share of the cost of that audit. Again, many of us have already heard of the change in the threshold under 425A, but this whole section here was imported from actually the A133. And then when we get to A133 and we're in subpart F, which is now subpart F, we'll see that when it gets to audit cost, it will refer right back to this. So in terms of allowable costs, the language hasn't changed in paragraph 1. It's you can't pay for an audit if it hasn't been conducted. Makes sense. Or if it has not been conducted, it has been conducted, but it wasn't in accordance with these requirements. So it didn't meet the specifications or the requirements of the Single Audit Act. So if you did that and it was a deficient audit, that cost would be deemed unallowable to the federal award. And then, of course, the biggest change is the threshold change. It was increased from 500,000 to 750,000. So when we expend, the amount of our expenditures of federal awards exceeds 750,000, then that triggers a requirement for the single audit. 425, paragraph C. There's a little bit of change here. Nothing huge about talking about if we were going to do they were under the threshold, or if there's a pass-through entity. The cost for agreed upon procedures engagements to monitor sub-recipients are allowable, but only if conducted in accordance with the generally accepted government accounting standards, attestation standards. So that used to say in the former language the AICPA standards, attestation standards. So that's changed in the language. So otherwise, I think it's known as the Yellow Book. We've probably heard that more often. Those are the standards. If you are a pass-through entity and you're going to do some procedures on your sub-recipients or audit engagements that are not a full single audit, then it would have to meet these attestation standards. 428, there's this thing called improper payments. Can someone, just for education, read the definition? If you go to your definitions, there's a definition, or just get the gist of that definition of what is an improper payment. It was a new one for me. Well, what's an improper payment is, what kinds of things might that be? We might not see this in our programs, maybe you have, but anybody find that definition and would like to read it?
Improper payment means any payment that should not have been made or that was made in an incorrect amount, including overpayments and underpayments, under statutory, contractual, administrative, or other legally applicable requirements. And improper payment includes any payment to an ineligible party, any payment for an ineligible good or service, any duplicate payment, any payment for a good or service not received, except for such payments where authorized, any payment that does not account for credit, for applicable discounts, and any payment where insufficient or lack of documentation prevents a reviewer from discerning whether a payment is proper.
Lot there, okay.
A lot there, yeah.
Bottom line is, if that occurs, and I think try to think of an example of where that might occur in our programs, maybe the types of assistance, rental assistance payments we might, and it was a wrong amount, or we determined they were ineligible for that assistance, so that could be deemed an improper payment. So what this is saying is the cost incurred by the non-federal entity to recover those improper payments that isn't allowable, either as an indirect cost if you include it in your indirect cost pool, or as a direct cost. 430, paragraph C. So this is kind of an interesting one. Paragraph C addresses professional activities outside the non-federal entity. So this is someone who maybe is a professional entity within the organization. Perhaps they're an environmental professional, they are an executive director, and they're really good at writing grants, and so they hire out their services as secondary employment to get compensation for their services. So this says that unless an arrangement is specifically authorized by a federal awarding agency, a non-federal entity must follow its written policies and practices concerning the permissible extent of that outside employment. So what this means is, and here's the to-do, this is going to require some action for all of us. We need to go back to our personnel policies and see if we address outside employment, and what's our policy on that. So the idea here you'll see is that pretty simple. The government doesn't want to pay someone to do professional services outside the organization. If it's taking you too much time, taking you away from your job, and they're really compensating you for that time, and you're really working for your own services, then they want to put a kibosh on that. So where it says, paragraph C, where written policies do not exist, okay, then, and so the permissible, if they do not exist and do not adequately define the extent of a consulting or other non-organizational activities for extra outside pay, the federal government may require that the effort of professional staff working on federal awards be allocated between your non-federal activities and your outside non-organizational professional activities. So if it doesn't make sense on paper that it doesn't compute, then this is where, and this is important to say, this is a may require. So it's really going to be if something comes to light as part of an audit or what have you, it may come to light, and the federal agency may inquire more about how salaries are computed and the person's doing outside work. So it's a may. Last thing on that, if the federal awarding agency considers the the outside professional efforts to be excessive or inconsistent with the conflicts of interest terms and conditions of the federal award. Appropriate arrangements will be negotiated on a case-by-case basis. So anyway, kind of an interesting new cost principle for us. New one on, moving on to 430. So this is addresses incentive compensation. It is an allowable cost. So just by the way, if anybody remembers the cost for, we always remember this, we had it was included in there for morale, employee morale. Everybody remember that? That's gone. It's been removed. No more staff morale cost. But anyway, there is this incentive compensation that's based on like a safety award program that we're doing within the company or the organization, efficient performance, suggestion awards, etc. It's allowable. It's allowable to the extent that the overall compensation is determined to be reasonable. So it's not going to be, you know, it's going to be reasonable. So it's not going to be, you know, a safety award. The time and effort for that could be, you know, I'm not going to put any dollars on that. It's reasonable. I started to give an example, and it's like, no, I better not do that. So it's determined to be reasonable, and the costs are paid or accrued pursuant to an agreement entered into good faith between the non-federal entity and the employees before the services were rendered. So this means it's an announced program. Everyone understands the rules, the terms of this incentive compensation or award. It's not done, hey, well, we want to give Joe, he did such a good job, we're gonna give him an extra $500 and we're gonna charge it off as an incentive compensation. But it wasn't announced to all the folks, and not everyone was participated. That wouldn't be allowed. Okay, so we're moving on to 430I. How many remember or have done personal activity reports? If you worked for federal awards, I've had that experience where I had four or five different awards, or even if you're working on different programs within one federal award and you're charging off a time to your administrative cost or direct cost, you have to keep these personnel activity reports. So the big change here is that the system for how we document, before it was prescribed to us, the changes here now reflect, they've stepped back and they're giving us the sort of control language or the criteria. And so it says this, that charges to federal awards for salaries, wages must be based on records that accurately reflect the work performed. So these records must be, one, supported by a system of internal control, which provides reasonable assurance that the charges are accurate, allowable, and properly allocated, that they're incorporated into the official records of the non-federal entity, so they're part of your record keeping, and then also that they reasonably reflect the total activity, not exceeding 100% of your compensated activities. So, and then also that time encompasses both your federally assisted and all other activities that are compensated by the non-federal entity on an integrated basis. May also include the use of subsidiary records as defined in your written policy. So what this means is if you meet these standards, if you have a payroll accounting system, even if you are doing personal activity reports, that's okay, you can continue to do that. If it works, that's fine, as long as you meet these standards. So if you look at the side-by-side in this, you could see the prescriptive language for personnel activity reports, and all of that has been removed, and now we have just these general standards. So as long as we meet these standards, we're going to be okay. Oh, and then the last one, number 5 of that, was comply with the established accounting policies and practices of the non-federal entity. Okay, so, and then this paragraph 2 says then, okay, for records whatever records you have that document that, which meet these standards, then you're not required to provide additional support or documentation of the work performed. Other than I3, so we'll look at that next. So again, just to reiterate, if you already have a really good accounting system, you have a payroll time management system, so we, sometimes do a little survey in a class about what kind of different payroll systems they have. How do you track when someone's working on a different job in maintenance or and they're on different jobs? What's our accountability? We have now the burden of ensuring that we meet these standards, that the folks are out there in the field doing that work, completing that, and it's being charged off, allocated to specific budgets and line items efficiently. So paragraph 3, so where it says, other than that, reference in paragraph I3, this is a new section added in accordance with the Department of Labor regulations for the Fair Labor Standards Acts. Charges for the salaries and wages of non-exempt employees, in addition to the supporting documentation described in this section, must, underline that, must also be supported by records indicating the total number of hours worked each day. So if you have non-exempt employees working, there is not going to be like, let's just round up or whatever. You got to have a real record of that time worked for that employee, because the overtime laws are in effect, and you will need to back that up as part of your audit to document that these folks are in fact not working overtime and not getting paid or compensated for that overtime. Okay, let's move to the next section, 431. Fast forward to 431, compensation, fringe benefits, a couple of changes. Again, really more expanded language, and what I see is just more specificity and clarity for us. So you can see that the types of leave that they discuss here are leave, the types of fringe benefits are leave, employee, insurance, pension plans, post-retirement health plans, and severance pay. So the overarching sort of general criteria that's being applied here is that unless accepted elsewhere in these principles, they're allowable if it's reasonable, required by law or an employment agreement, or established written policies of the entity. So let's take a look at that. Leave, what's changed for paragraph B on leave pay. You'll notice there is some language added for family-related or administrative leave. So those are new terms that we didn't see in the former A87. So, but leave pay is allowable if it meets all of the following criteria, that they are according to your written policies. If you provide administrative leave or family-related leave, that needs to be written in your personnel policy, that you provide that. The circumstances, the amount of leave that you provide, etc. That the costs are equitably allocated to all related activities and federal awards. So if you have multiple federal awards, each federal award needs to pay its fair share of that benefit. So whether or not your counting basis is cash or accrual, each type of leave is consistently followed, so that you follow the rules for accounting for leave either on a cash or accrual basis. Oh, here's a new one, kind of interesting. I thought it's kind of interesting. Paragraph E under 431, and this came from the A122 cost principle. It says costs of insurance on the lives of trustees, officers, or other employees holding positions of similar responsibility are allowable only to the extent that the insurance represents additional compensation. So like the only example I could think of, if we have board members and it's part of their compensation for being on the board. They receive a a burial insurance policy or something. So this is saying that's allowable, but here's the kicker. The cost of such insurance when the non-federal entity is named as beneficiary is unallowable. So we're not going to take out insurance on our board members, and the TDHC or the tribes are going to be the beneficiary of that. Kind of fun, yeah. Got to have some fun. So next one, 431, fringe benefits, paragraph A. Also that came, and it was adapted from A21 and A122 that we had seen before. But basically, it's the portion of automobile cost if we were to give a vehicle and say this is part of your compensation package, you get to drive a vehicle for personal use, and yeah, we're going to deduct it out of it's going to be a taxable income to you from the IRS and all that. If you do that, what this is saying, it's unallowable, regardless, no matter what, that's going to be an unallowable cost of the federal award. All right, moving on, 431, compensation for fringe benefits, paragraph I, regarding severance pay. Just some new language. We've had this before. The highlighted part in red. So costs of severance pay are allowable only to the extent that in each case it's required by law. You have it in an employer-employee agreement. And then established policy. And then this language was added that constitutes, in effect, an implied agreement on the non-federal entity's part or circumstances of the particular employment. So that's where you know if you've been around, if you've had some of the experiences that if you've read human resource policies, that says, well, it's implied that we provide this service. And this is making it clear as if your policy implies that there is severance pay, then, you know, it would be required and it would be allowable. So costs incurred in certain severance pay package which are in excess of the normal severance pay paid. All of a sudden there's a blip in the screen and this person got a really large amount of severance pay. Or paid to the employee contingent upon a change in management control over or ownership of the non-federal entity's assets. We think that's probably coming from nonprofit organization, this language. Probably not something that would be applicable in our circumstances, but in any case, if that happened, those costs are unallowable. Okay, 432, conferences. We're all holding conferences, right? This is always a big item of cost. If you first started in Indian housing, this is probably one of the first things that you look at you did look at in '87 as to what's an allowable cost regarding a conference or event that we're holding. So a couple things to point out to you, new changes in here in conferences, that there is a language that gives a language of the things that are allowable under conferences. And there is a language that says unless further restricted by the federal awarding agency. So it gives the ability of the federal awarding agency may actually add additional terms and conditions where they could further restrict that. So it's a meeting, retreat, seminar, symposium, workshop, or event whose primary purpose is the dissemination of technical information beyond the non-federal entity, necessary and reasonable for successful performance under the federal award. So then it goes into list the types of costs that would be allowable. So new language in there, conference host sponsors must exercise discretion. So in the wake of the stories that we've heard of excessive spending at conferences, this is a necessary language that we must exercise a great amount of discretion in what even though it's allowable, is it reasonable? And then another interesting clause that's added in here. Federal awarding agency may authorize exceptions where appropriate for programs including Indian tribes, children, and the elderly. So that's going to be probably on a case-by-case basis. If you feel like you need an exception to any restrictions that may be in this language for an allowable cost, the examples they give refer to what may have been referred as an entertainment cost or a participant support cost, which we'll cover later. There is the ability of the agency to authorize exceptions. Okay, so next section to look at is 433. Again, some expanded language. Not really super big change for us, just providing some clarity on how contingency provisions or for budgets can be implemented. So it's got to be specified in the budget documentation of the federal award, accepted by the federal awarding agency as a contingency provision. So main thing to remember about that is what it doesn't mean. And so events that the occurrence of which cannot be foretold with certainty as to the time or intensity or with an assurance of their happening remain unallowable. So in our mind, we might think of contingency as that kind of circumstance, and this is saying no, not that. It's really, if it's in a construction budget, the federal awarding agency may allow a certain amount in your budget approved as a contingency amount to achieve that objective under that federal award. 200-435, defense and prosecution of criminal and civil proceedings, claims, appeals, and patent infringements. So this language is significantly expanded. We couldn't fit this on, this would take several slides. We don't need to repeat what's written there. Just to summarize what really has expanded here. The overall basic intent remains the same, that legal expenses for administration of the federal programs are allowable. That language is still there. Legal expenses for prosecution of claims against the federal government are unallowable. So kind of the two ways of looking at it. So what we're telling folks is that if you are going to incur a legal cost to your grant, 200-435E is the very strict criteria for how costs may be allowed. So there's a very sort of prescriptive language in 435E that says if it meets this, this, and this test, then it may be allowed. What we would really advise folks to do is to consult with your attorney on meeting that criteria. If you are going to incur some cost that would fit under this category of defense, prosecution of criminal proceedings, claims, etc., then to definitely make sure that that cost is going to fit in the prescriptive requirement of 435E. Depreciation, 436. And earlier in the beginning of our cost principles session, we talked about depreciation, and we have a program-specific regulation and exception to that. So it's one of the items that require prior approval, and so the depreciation method for fixed assets shall not be changed without the approval of the federal cognizant agency. So what's changed? What's new and expanded? So depreciation is the method for allocating the cost of fixed assets to periods benefiting from the asset use. So the non-federal entity may be compensated for the use of its buildings, capital improvements, equipment, software projects that are capitalized in accordance with GAAP, provided that they are needed in the non-federal entity's activities and properly allocated to federal awards. So what's changed? Some provisions for donated assets. It's the acquisition cost is valued at fair market value. It's depreciated or claimed as matching, but not both. And then here's the one that it really is a big change that for me that I noticed in this is provision for negotiated use allowance for fully depreciated assets is removed. So we have the ability to, one of the depreciation methods was the use allowance. So even though we had fully depreciated a facility, we could negotiate a portion of that as a use allowance and receive some income off of that, from that federal program. So that's been removed, and so it's no longer a depreciation method. Bottom line, may not exceed the total acquisition cost of the asset. And in no cases would the depreciation charged off of the grant exceed the cost of the asset. 438, entertainment cost, allowable under certain circumstances. So this is the language that's added here. It says where specific costs that might otherwise be considered entertainment have a programmatic purpose and are authorized either in the approved budget for the federal award or with prior written approval of the federal awarding agency. So kind of an interesting take, on what I think in the world of our block grant programs, around youth activities. You can see there are probably some activities that might be on the edge of, is that entertainment? Again, this is saying it would need to be a part of a programmatic purpose, be authorized in your IHP, in this case, your Indian Housing Plan, primarily. So there isn't a prior written approval requirement for this because we have that in our language within the exceptions language. 442, paragraph A. New item of cost for us is fundraising and investment management cost. So two parts to that. Allowable, which is not the part that's unallowable, hasn't changed. So costs of organized fundraising, capital drives, endowment drives, solicitation of gifts, bequests, all of those costs incurred to do that type of fundraising is unallowable. So that's not a change. What's changed is this, what would be allowable. So fundraising costs for the purposes of meeting the federal program objectives are allowable with prior written approval from the federal awarding agency. So, for example, again, going back to our youth prevention programs, you can see fundraising is generally a part of our communities for funding our youth prevention activities. So the cost that might be incurred to organize that would be allowable. And we do have the federal prior written approval from the federal awarding agency on that in our language within 1026. 445, goods or services for personal use. Okay, so no change. This is specific to employees. Cost of goods for personal use has always been unallowed, still the same. And this is where we see the section on cost of housing. Apologize, I got a paragraph numeral off there. But the cost of housing allowances, personal living expenses are unallowable as direct costs. So we've covered that. That is a program-specific requirement that does require specific HUD approval. So if you decided to go, hey, I didn't know we could do that, we can add some housing costs to sweeten the deal because, hey, they have a hard time attracting qualified directors to our program. So we decide we want to add that to our salary package, some housing allowances. It will require HUD prior approval to do that for both the IHBG and the ICDBG. General cost of government, we've known this for a while. There's no change here. The cost of government is not an allowable cost to our federal programs. unless it's attributable to the operating and managing federal programs. So the new language here, which is good for folks that have indirect cost proposals, up to 50% of those costs can be included in the indirect cost calculation without documentation. So in my chief, my tribal chairperson, his salary, I can charge off 50% to the indirect cost pool, and I don't need to support that with any documentation that he is indeed managing 50% of that time. New section on 451, losses on other awards or contracts. So any excess cost of income, any excess of cost over income under any other award or contract of any nature is unallowable. Any excess of costs over authorized funding level transferred from the award or contract is unallowable. And then all losses that are not allowable indirect costs must be included in the appropriate indirect cost rate base for the allocation of those indirect costs. So if we are recovering losses through our indirect cost pool, then it must be included in the indirect cost rate base for the appropriate allocation of those indirect costs. 453, this was a great new addition, new language to the cost principles regarding, that includes now the cost of computing devices. So materials and supplies used for the performance of a federal award may be charged as direct cost. So in the specific case of a computing device, charging as indirect cost is allowable for devices that are essential and allocable, but not solely dedicated to the performance of a federal award. So no longer do we have to be so particular about, hey, well, you can't use that computer. That's an IHBG computer, and so anyway, we have some flexibility here in this language here. If it's not solely dedicated, it's still an allowable cost. 455, organizational costs. So, what's an organizational cost? Let's take a look at that. Let's have someone read that, because this question usually comes up in training. What is that? What kind of cost is that? So again, this is a cost that remains allowable under the Indian Housing Block Grant per 1026B1, but this cost would require prior HUD approval under 10501B. Anybody want to read that? Don't read the whole thing, but just give us the essence of what the organizational costs are. You guys having a...
Costs such as incorporation fees, brokers' fees, fees to promoters, organizers or management consultants, attorneys, accountants for investment, counselors, whether or not employees of the non-federal entity in connection with establishment or reorganization of an organization are unallowable except with the prior approval of the federal awarding agency.
So you can see the use of management consultants. You can see that as would be something we would use quite regularly in any housing block grant. But anyway, so you can see the types of costs when it gets into looking at the charter and the legal requirements for developing an organization. That's not going to be something you can charge off the ICDG. Not appropriate. If you did, it would have to have that prior approval. 456 is participant support costs. So this is a new thing for us too. I added the definition here just for us to look at real quick, because I thought it's kind of interesting. Participant support cost means the direct cost for items such as stipends, subsistence allowances, travel allowances, registration fees that we might be paid on behalf of that participant to attend a conference or a training in connection with that project. So you can kind of see, if you had, housing resident organization and they are in a finance budgeting class and there's a particular training or conference that as part of the end of that class, that might be an example of how that could be a participant support cost that would be a part of, approved in your Indian housing plan. So it's allowable, and again, it says with prior approval, but again, we have that prior approval status already in 1026 and also 1003-501. 463 and 463, I think, and 464 is quite expanded section for us on recruiting cost and relocation cost. New stuff we haven't seen before. So clarifies that they are allowable to the extent that those costs are incurred pursuant to the federal agency standard recruitment program. So cost of employment agencies that are non-excess of standard commercial rates. Any form of compensation, fringe benefits, salary allowance must meet the test of reasonableness, of course. Allowable, but the non-federal entity must pay back the relocation costs to the awarding agency for employee who resigns for reasons within the employee's control within 12 months after hire. So that's kind of a a different if you use an employment agency, there might be part of that recruitment fee that's in there. And so this might be an example of that. You have to pay that fee and then they leave and within 12 months, then this is also saying that then that cost is now going to have to be paid back. So again, main thing to remember is that it should be a part of your normal policies and procedures your standards that you set in your personnel policies. Relocation costs of employees are costs that are incident to permanent change of duty assignment or for recruiting a new employee as well. So the relocation costs are allowable, but they're subject to that the move is for the benefit of the employer. And I emphasize that in accordance with your written policy consistently followed by the employer. And that the reimbursement does not exceed the employee's actual or reasonably estimated expenses. So we can go into what are the kinds of expenses, what are the allowable relocation costs for current employees. So costs of transportation of household, personal effects, so moving truck expenses. Interesting, the cost of finding a new home up to the maximum period of 30 calendar days. Closing costs of the employee's former home, but some limitations, 8% of the sales price of the employee's former home. Allowable relocations are limited to number 4 or 5 is the continuing cost of ownership for up to 6 months of the vacant former home. After the settlement or lease date of the employee's new permanent home, and then other necessary reasonable expenses normally incident to relocation. So cost of canceling an unexpired lease is limited to 3 times the monthly rental. So take a look at this section, really break it down, make sure you understand all the nuances of this. A lot of new language in here for us in Indian Housing Block Grants and ICBG. 473, transportation cost. Not a big deal. We charge this, you already have a process for doing this, but this clarifies that if you have costs for freight, express, cartage, postage, other transportation services for goods or purchases can be charged off as either direct cost or indirect cost. Either way, however you do that. Most of us probably charge off the entire cost as direct cost, but this just clarifies that either one is allowable. Another really important one, a new change, and again, as part of the uniform guidance emphasis on family-friendly policies. Here's an example of that, and that is in the paragraph C1, under travel costs, we now have the ability to have temporary dependent care costs above and beyond, and that's kind of the key, above and beyond regular dependent care. So here's the, if you're gonna do that, you gotta meet these standards. So take a look at these. Direct result of the individual's travel for the federal award. The costs are reasonable, consistent with your documented travel policies. Got it. That's gonna be the to-do thing if you wanna add this provision to your travel policies and you wanna be able to provide child care costs or dependent care costs above their regular care, dependent care. You gotta have it in your policy, that you do that, and that you allow that. And then it's, of course, temporary only for that travel period. C2 clarifies that dependent travel expenses are unallowable, so except when that travel would be 6 months or more. So, for example, a single mom needs to go to training, has a small child. She can take that child, or let's say she's gonna go off to training and she has a child she has a child in daycare during the day, but she's gonna be gone 3 nights. So she's gonna need additional child care for those nights that she's away and out of town, right? So that's what this is saying. So it's beyond regular dependent care. So we wouldn't pay, if she normally paid for child care during the day when she's working back at the office, we're not paying for that, but we're paying for the child care she needs at night. That's beyond the regular dependent care. 474 travel costs, paragraph E. Minor change, but it'd be instead of first class for commercial airfare costs in excess of the basic least expensive unrestricted. So it used to say first class, I think, or no, in excess of the least, I think it said coach class. So now it says least expensive unrestricted accommodations class offered by commercial airlines are allowable. And then, of course, the conditions that were there before, those remain the same that were listed there. That basically, the fares are so complicated in airfares, and so unrestricted means usually you can get a refund on that fare. And that takes us to our exercise. So now we're going to do a little exercise to kind of practice these cost principles and give you a chance to test your knowledge, make sure you got through. And then we'll come back and go over the answers together. Okay, we're back. I see that everyone's got it all done. So let's check our answers, see how we did. So the first one, practice exercise 1. THA used IHBG grant to rehab a low-income housing property it owns. So which of the following are indirect costs that are partially allocable to the Indian Housing Block Grant Award? So I'll just read them one at a time. You can say yay or nay, okay? So first one, the cost of the architect's fees, who was hired to work on the project. No, that's going to be a direct cost, directly programmed, yeah. So the salary cost of the grants manager, who is responsible for multiple state, federal, and foundation grants.
Tax loss. Indirect.
Indirect, yeah, definitely going to serve multiple programs, so. Number 3, the cost to move the families to another location while their building is being rehabbed.
Direct costs.
Direct cost, yeah. Going to be part of our development costs, rehab costs. And the last one, the accounts payable personnel cost. And, yeah, indirect. So the personnel, they're serving multiple functions, so definitely indirect. Okay, good. So number 2. And there'll be bonuses for those that can give me the citation. Okay. All right, THA has been fined $1,000 for a zoning violation for a project funded with an IHBG grant. So which of the following statements are true or false? So we'll go through these one by one. Okay, so the fine is allowable because THA was not aware of the zoning violation.
False.
False, okay. Number 2, it's not allowable because fines are unallowable costs under the IHBG program.
True.
True, okay. And number 3, the fine is allowable because it was incurred as a result of compliance with specific provisions of the federal award.
False.
Couldn't trick you, huh? And then the fine is allowable because it is a minimal amount.
False.
Okay. And the fine is allowable because THA has prior written approval of the IHBG award.
False.
Okay. So anybody know the citation for this? Remember we discussed this earlier?
1000.26 B 1 double I.
Good, perfect. Good job. So, yeah, so we have that was the exceptions we have for prior written approval. This has been with us from the beginning of NAHASDA since the regulations came into effect. In no cases are fines, penalties, allowable costs to the grant. Number 3, PHA incurred advertising and public relations costs in 2016 and charged it to the Indian Housing Block Grant. So the external auditor found these costs and he deemed them either allowable or unallowable. So what did the auditor rule on each of these following costs? So we'll go through each one and you can see what you think. So first one, advertising costs for the recruitment of personnel required by THA to work in the federal program.
Allowable.
Allowable, yes, okay. So cost of meetings and events related to other activities of the entities, including the cost of displays and exhibits.
No go.
Unallowable, everybody, that's right, unallowable, great. Cost of advertising and public relations designed solely to promote the non-federal entity.
No way.
Unallowable.
Unallowed, yeah. So, cost of communicating with the public and press pertaining to specific activities or accomplishments which result from performance of the IHBG award.
Allowable.
Allowable, good, okay. And the last one, cost of conducting general liaison with news, media, government public relations officers to keep the public informed on matters of public concern, such as notices of funding opportunities.
Allowable.
Allowable, okay, who found it? What section is that in? Anybody?
Go ahead, show
I
off.
changed the page. It was under advertising costs.
Yeah, it's the first one. Remember, you find these because it's all alphabetical order. So if we go into our section, subpart E, beginning with 420, it's 421. So it's the very first one because it's all in alphabetical order. So just think about that whenever you see a cost. You can quickly go to that table of contents, go down there and see if it's in there, that table of contents, and find that specific cost that you're looking for to make that determination.
200.421D3.
Good, that's it. All right, last one. Exercise number 4. So a THA employee was required to attend an approved training conference related to her work that is funded with a federal grant. The employee brought her young daughter with her who required daycare services. So there were a couple of days in the conference where the employee had to participate in training that lasted longer than she anticipated, and it caused her to use daycare services beyond the 8 hours a day she normally would pay for childcare services. So scenario A. THA does not include temporary dependent care in its written travel policy. So how much of the cost is allowable?
0.
Only the cost pertaining to
So-
the hours above.
Yeah, so number 3, 100% of the cost is unallowable, right? Because that's the thing, if it's not in their policy,
Then it's not allowed.
it's not allowed. Even though it says, right there in black and white, it says, hey, it's allowable, but if it's not in your policy, it's not allowed. Scenario B, temporary dependent care is included in the written travel policy, so how much of the cost is allowable?
Only the cost
100%.
pertaining to the hours above and hours below, the
Good.
8 hours.
Good, Monique, gotcha. All right, so that's the trick right there. What it can catch you is like, okay, no, it's in our policy, but it's only above and beyond
The 8 hours.
normal dependent care. So that if she already would have paid for childcare for 8 hours that day, it extended beyond that, that's the only amount that she's gonna be getting reimbursed for. Good one. All right, so
I did.
that concludes our session on cost principles, session 8. Thank you for your time.